Hello traders and welcome to the mentorship video where I'm going to share with you how we are trading the GBP I'm going to show you based off the next couple of days how many possibilities we have with our strategy that we use. Just a quick reminder, what kind of thing we are trading is in the first place definitely looking at structure. So this is the most important thing, is always structure. The second important thing is about liquidity, okay, how liquidity is provided. So these two things we need to have perfectly in common for us to even look at a possibility to take an entry. And the third thing is we'll look at supply and demand to get involved in a specific trading setup. Okay, now for us, definitely structure is the most important thing in combination with the liquidity to understand if we even should look for something. And supply demand can be used as well, okay, on the higher time frame, but on the lower time frame we do this thing just for our entry. Okay, and here we are super flexible because we like to also look to take some losses before we're going to aim for that one big trade. Okay, but yeah, let's just have a look. I'm going to show you how you're supposed to analyze the GBP in order to get the same results which can be done with this strategy. Okay, now I'm always starting with the weekly time frame. Sometimes I'm even looking at the monthly if the price is at a very important area. Now specifically here, this zone would have been a monthly area, but we're not there yet. You can see that something is here and the price is reacting to it. This is what we got currently, a move to the downside, but this is right now not that important for us. More important for us is the weekly time frame, and here is an important zone or level which I explained to you multiple times. Now I explained to you in all of my videos that this is my weekly range, this is the weekly low, and here to the upside we got the weekly high. Okay, now what you can also see here in the first place is that the price also here faked out a little bit, right? So we had a little bit of a wick above it, and the same kind of thing we have here. Here's the difference, is just that the wick is a little bit bigger over here. And if we switch then to the daily time frame, you can see that on the daily time frame we even closed below that zone. But this is right now not very relevant for us, because what we get, so what kind of information we get from the thing is that the market definitely took out liquidity. Okay, so whenever you have a range like that, which is the weekly range in this case, you have a ton of liquidity just a little bit below it. Okay, so retail traders are always looking at an area like that in the first place to buy from it. Okay, always to keep in mind for you, they're looking to buy from this support, and the breakout traders are looking to sell from here when the price is closing below. Now, this is not the only thing how the smart money traders get the liquidity in order for them to get involved afterwards in a big buying position. No, the other thing is as well that these traders who are failing to buy from it, they're always waiting for that retest, right, to get involved in that short. So you got the breakout traders who are immediately in that position, okay, because they have their sell stop, which are triggered with that move to the downside. And then with that one test of this level, you also got traders who are involved to look after break of retest to get also involved into a short position. And this is how, yeah, you got actually three types of trader which you bring out of the market. Okay, now this means for us, we have a lot of liquidity available for our long position, and this thing would have been our first trade. I sent it also in the inner circle. It was super obvious, so let me just explain you this trade before we're going to get involved in the further trades that are available. Now here you can see it pretty good, right? So this is a very typically kind of an accumulation phase. So it's not the best Wyckoff example, to be honest, but this thing is, you can view it from the first view. Everybody from the mentorship knows that exactly this is an Wyckoff accumulation. Now let's get it a little bit into the depth to give that I'm going to give you more information about what specifically is happening during this accumulation phase. Let me just let this thing over here just to make things more clearly that what kind of range we're speaking about. Okay, now I like to always analyze it then on the 1 minute time frame, because this is how you can get involved in the best entries. You can see previously market was super short, right? So the market was still going to the downside, and this kind of thing here could have been your first break of structure. Now this is kind of a risky thing. This is what you need to decide by yourself if you like to get involved into break of structure like this, and then to get involved into a buying position. In this case, I will completely be with you if you would say, yes, I'm going to take an entry over here, because right below you got a ton of liquidity. Let me just explain it to you. So you got here, this is the really last push to the downside, guys, okay? With this last push, you took out definitely a ton of liquidity. Why? In the first place, you got your weekly level of range here, right? Your weekly low. This is super important for us to understand. So we got here liquidity. We know that at the moment when the price went here to the downside, we've been tapping into a high liquidity point. What you can see over here is that contraction phase. So you can see that the price is definitely bouncing from the downside to the upside, accumulating some position. So this is kind of a pre-accumulation phase. Now, for us, it's not important what the price really did here. For us, important is that the price actually created liquidity below it. And what the price did is it broke structure here, okay, went to the upside, went lower, and targeted this specific liquidity here below. This is what it did. Then price pushed up higher and broke this structure here. Now, for me, in this case, just because we've seen this pre-accumulation phase, plus we had that weekly level here, is for me definitely enough confirmation that I'm looking for a buying opportunity, and that I view this break of structure over here as an invalid break of structure. And this is definitely the last push. Plus, in addition, guys, what we can also see is here below, we also have a ton of liquidity. And with this move to the downside, we're also targeting this liquidity as well. So this is the same example which I explained to you previously on the weekly time frame. You are faking out, again, people on every single side. You're faking out breakout traders. You're faking out break and retest traders. You're faking traders who are looking to buy from here. You're faking traders who are like looking to buy from here and here, and you are entering exactly at this level of demand. And that's basically it. That should have been your entry for this trade. Now, if you're missing this, it's not a problem, because in this case the market tapped in at 10 o'clock. Now this is something which the majority of you will probably not trade. Also me, I'm not going to trade stuff like that because I'm sleeping, okay? Now if you're exactly beyond the charts at this moment, then this would have been your perfect trade. But let's continue. Let's just move on 7 o'clock, the hour where you should definitely start looking at the charts. And this is where the price actually really broke some more important structure. It broke this kind of structure over here. So let me just put it over here. So you got this break of structure over here, and in addition we even broke more, right? So we even broke this structure above. So it's even more confirmation for us. So I'm going to remove right now this weekly level, because we know we are here in that weekly liquidity point. For us, important is, okay, we got break of structure. Then what the market did is with this uptrend is collecting liquidity for a potential up move. Afterwards, the price actually dropped to the downside. And now it's important for us. At 8 o'clock, Germany is going to join the markets. Okay, they have their open, boom, pushing the price up higher, creating here again some kind of structure, right? So this is kind of a significant structure. So you got this significant structure and you have this significant structure. Okay, you can see it pretty clearly. Now we're still waiting. At this point, you're still waiting because you would like to see what London is going to bring us. But we know exactly at this point that we have ton of liquidity located below over here. And what the market is doing at 9 o'clock is it is actually targeting exactly this specific liquidity. Price is pushing lower. Look at this. You got here your equal lows. You get something here. And where the price actually is tapping in is exactly in the last push of this move. So you got actually this whole big move, which is your last push to the downside, which you can minimize a little bit. This is always kind of the thing. How are you going to deal with that? How small are you going to do it? And in this case, on the 1 hour, 1 minute time frame, you cannot really specify something. The only thing which you can do in this case is to put it here in this strong up candle, because this is a strong momentum candle to the upside, and you can definitely use this one here as well. Now, generally speaking, I always recommend grabbing this whole move, because this is the way how you will never actually lose any kind of position. So you will always get involved, but you will not get the best risk reward possible in this case. The wick, you don't always need to include the wick just to explain it up front. But in this case, it looks, from my point of view, look at this, it's the momentum candle to the upside. So what they did is actually they short that market and pushed it afterwards immediately to the upside, and this is how you can use it as well. But what you can specify in this case is that you have also here, look at this, it's perfectly, you have the last up move, down move, okay, this candle before the market is actually breaking the final structure, okay, because you're breaking here this structure, and this is how you can also use this kind of candle. But look at this, it's kind of a super risky thing. I'm always recommending you to put a little bit below the zone your stop loss, but this is the only way how you can get really the most risk reward possible. But this is the thing right now, if you are going to really do this, if you will see something like that, because it could definitely bring you out of the market. Okay, so this is kind of a risk management thing that you need to deal with, how you're going to use it for you personally. What I definitely recommend you always is to just use the last move like this. Now, furthermore, we can also switch right now to the minute 5 or even to the 3-minute chart to see if we can spot something. And in this case, you can see that you have here that one candle, and you can make it a little bit lower. So I would do it like this. I would use in this case the minute 5, because it's more clearly this minute 5 candle actually took out liquidity from here, as we discussed previously, but didn't went lower than this, and this is completely fine. This is exactly how I wanted to see it. Let's just watch the 3-minute candle to see if we can here do something even. Yeah, on a minute 3, you can definitely use this one. So look at this. On a minute 3, yes, you can get the best entry from my point of view possible. And this is what I definitely recommend you all to do, right? So you always need to switch to time frames to understand what kind of candle you will use at least, okay? A minute 3 candle is the best thing right now possible. And then look at this, guys. Price actually went up higher, so you're doing your setup like this, putting your long position here, stop loss below, and you are getting involved in one of the best trades possible. Really, this is really a pretty nice trade. Price is pushing higher, so you could really target here kind of very big risk rewards. And yeah, these kind of trades you should always look for. Okay, so let me just delete it, and let me just explain you the further movements, because the next thing what you should do in this case, we've been not looking for any kind of level of demand. Why? Because we've been already at a very significant point of liquidity, as I explained it to you already. Okay, so liquidity, that's for me the best liquidity points that you can even get. Of course, I'm looking to get involved in that one thing, and you can see how the London open is pretty nice, the same, confirming us the same. Now, switching afterwards to the daily time frame, we can spot a level of supply right over there. You can also use in this case the complete move. I would suggest you to use only this one first, because this is how you can minimize it. But of course, we're looking then on the 4 hours to see something more. And yes, on the 4 hours, you can see that the market actually took out liquidity with this movement. Okay, it took out liquidity from this trend, right? Because it just, people have been looking to short from here, and what the market did is it just bought right through it, went lower. But also this push here is a manipulation, because the people are looking here to buy afterwards, right? Because they view this thing then as a break of structure, and they're expecting the price to push up higher, and this is what the price at the end is dropping. Okay, and this is how I can use, of course, also a much smaller zone, and this is why I'm more than likely looking for this zone instead of using this whole big one. That would not make that much of sense. But of course, when the price will tap into this zone here, you can also look for some possibilities to get involved into a short, and we will see that right afterwards. So, why should you not use this one? Why should you not use the supply zone? Well, actually, look at this. This is super risky, because analyzing the structure, you can see that your new structure point is definitely here. This is your structure point. It is not actually here. Okay, so this is super dangerous to view this one thing as a structure point. You can definitely use it as a 4-hour structure point, but get into mind that we tapped in over here in a high liquidity point. The chance that we will break here this structure over here is pretty high, and this is why for me this is right now a valid break of structure, and I'm going to map this one over here on my charts. Uses this as my confirmation to look for more bullish setups, because my idea is to get right over there. So that one previous setup, okay, that one long that we took over there, you could have hold it right till the zone. So this is kind of a pretty accurate trade signal, and you can definitely hold these kind of positions for a very long time, because we do not expect that the price actually will drop all the way to the downside back. The only way, the only confirmation that could bring the price that much to the downside again is only fundamental stuff. But this is something which we should not really deal with it, because this is something which we can never control, and the market can decide it from one day, and then it will just affect the market immediately. And yeah, it would not make sense for us that we should pay too much attention and things like that. But let me just explain you more than likely the further further confirmations that we had over here, and how you can actually scale in your trades. Okay, so remember our setup was here. Here was our long position, right, at this level of demand. What the market did afterwards is it broke more structure. So the first very significant structure break was definitely this one, and this is how you can get the best entry afterwards. Of course, here to the downside was also possible, but remember, it was night. For us right now, significant was then this break of structure here, This one here is also pretty nice. And the fact is, we know price should go up higher. We got here, okay, our supply zone. We could target it as well. Now, let's look for further confirmation, and also let's have a look at the hours. This is something super important. Now, what you can see here is, after the price went up higher, okay, went up higher, it was here around 12 o'clock, and 12:30 is actually what? 12:30 correctly is US Open. Now, what they did is, let me just switch to the 1 minute. It's more precisely this information. We can see how they actually have been selling here. Okay, they've been selling it right lower. Okay, so overall, this movement is what they generated. But what they did is, they did not broke the structure, right? They did not broke anything. They've been selling it right into what? Into our last structural point. Now on the minute 1, to be honest, we cannot see it that nicely, but on the minute 5, it's pretty obvious. They've been selling it right into this zone here. The 1 minute, it is a couple of candles, okay? So on the 1 minute, I would have been drawing like this, okay? And this is why in this case, the 5 minute is more clearly. So you always need to decide what kind of time frame you're always using. Sometimes the 1 minute is better, sometimes the minute 5 is better, and like here, the 3 minute would have been better for a better entry. In this case, definitely the 1 minute, but it is kind of obvious always, because in this case, you should have been determining a couple of candles, and when you see something like that, then it's never the best thing. Okay, they've been selling, pushing it up higher, again, targeting exactly this previous low. Oops. Targeting it, using this liquidity. So they've been creating a liquidity point here, targeting that liquidity point, and push up higher. So this is why you can easily rejoin the market. So definitely here would have been the market for you to get involved into a new position, because what the market is here actually doing is it is just creating another trend, right? So it was previously pretty big short, but then look at this. Price here generated a new trend. Okay, and what you can do is always to just scale in to these areas. And now, this is something which is very phenomenal when you look at the specific times when New York and London is always getting involved in the market. Now, the thing is, the London Open was super manipulative, not breaking any kind of structure, but it targeted a level here to get here a ton of liquidity from this uptrend. This is what they did. Okay, they've been targeting this thing. Boom, push to the downside. And the US, they've been broken it. They've been definitely broken it. Super important to understand from the New York session is that New York session is opening at 12:30, but very important is, for them it's not relevant. It's not always relevant, of course. 12:30 is a super relevant time as well, but for them also the previous 1 hour, 1 to 2 hours are also important. Why? Because most of the times, in this price range here, time range here, they are doing something. And what you can see here is exactly 1 to 2 hours before New York opens, they've been broken structure. Now, our expectations are that they are going to respect this new structure. So their new range would have been this one. Of course, you could have been involved into this level of demand here as well. But they've been pushing at exactly at 12:30, they've been pushing it already into a level of demand. Now, the chance that we will respect this level of demand is pretty high, okay? And this is why they actually at the end really respected it, okay? And this is why I was definitely looking to buy also over here. And this would have been your second position. So we already have two pretty nice position for our GBP USD trade. So let me just put them over here and to show you what kind of risk reward would have been possible. Okay, so we are going to hold this position all the way to the upside. Not too much stop loss, okay? A little bit below the level of demand is completely fine. And always adjust your spread and you're good. Now, the most important part is what will occur afterwards. Again, we will see a break of structure. We have a break of structure and we're not interested in scaling any positions at this time anymore. Why? We need to understand that for us, the most important times, especially if we trade the GBP USD, is of course the London and the US. And these two entries have been our entries after watching what they did, how they targeted liquidity in the market. So I will not look any kind here to look into a scaling position. The thing is, you could have been looking into a scaling position. Look at this. You got a level of demand here. This could have been your entry. You got a level of demand here. This could have been your scaling position. But look at this, what the market did afterwards. It just dropped all the way through this liquidity. Because these zones here are only generated to bring you to get involved here, okay? More important for us is actually this zone here. So let's bring it more to the right and also this zone over here. And look at this, guys. This is phenomenal, and I will show it to you that this kind of thing is occurring very often. The same position, exactly where they've been buying it previously, okay, so don't forget it. They've been selling through it. They've been buying from here, breaking structure. Okay, so this is why for me, this is the significant market structure. Because exactly from here, the market has been broken it. Here, they've been just creating something, but the real movement occurred from here. This is why this here could have been a possibility, of course, but the higher possibility was still this one, as well as they've been selling it right over there. Then price respected it, pushed all the way to the upside. Super interesting, right? Now, we are extending that line to the right, that zone, because what the market is doing over here is breaking structure to the upside and creating liquidity here. This liquidity here was targeted by this movement to the downside. Boom. Price used that liquidity to push up higher. Right over there, they've been generating more liquidity. Price is pushing, targeting this liquidity here, pushing higher, and then targeting this liquidity point here as well. Boom. And this could have been your second opportunity to get involved into a trade. But let's have a look at the times, because this was during night. This was Asia session. Asia session has been preparing everything to come back to the downside, and then look at 9 o'clock what the market did. Exactly at 9 o'clock, they've been targeting this liquidity point. Okay, this one was already targeted, but they've been targeting the last liquidity point. And you need to always get step by step. Let me just show it to you what I mean by that. Step by step. The first liquidity was this here. Second liquidity was here. Okay. What we can see only by looking at these two liquidity points is that the market didn't have here that much of liquidity. I mean, they've been just selling right through it. It was just a quick reaction. Okay, but they've been targeting this here as well. Push up, but here they really cleared out liquidity below here as well as the liquidity below over there. And this is how the market then actually have been pushing it all the way to the upside. Okay, pushing it up higher. And this is always step by step, because this was then the next liquidity point. This was then the other liquidity point. This was the other one. And the market then exactly at 9 o'clock, so when the market opening was again, they've been taking out every single liquidity point out of this market. Okay, this here, look at this, was a break of structure, right? But the real break of structure would have been this one. In this case, they've been manipulating the research trader again to get involved at a buying opportunity exactly at this low, at this support, right? Then they gave that move up, right? After they break out, people have been looking to go short here as well. But then they gave you this movement, this kind of retest, and the expectation would have been this one. But what they did is consolidating a little bit, and exactly at 9 o'clock, boom, another strong move down to take out the whole liquidity that was located here below. And then the market sold it right over there, right into the position of the New York traders, and boom, price was just moving like hell to the upside. And that's it, guys. So simple, right? So it really doesn't look kind of difficult. So this would have been our second position to get involved into it. And boom. Now, how far can we go? As I explained to you, definitely right into this level of supply. This is our long-term target, depending on how you would like to do it. And yeah, price is just pumping up higher. Look at this here as well. Price could have been using this one as a scaling position, but why do I not recommend this here as well? Pretty simple to explain to you. Here above, guys, we got liquidity. We got a ton of liquidity here, okay? So this liquidity will be more than likely used to bring the price lower, okay? And this is how you can look here as well then afterwards into a shorting position. But that's basically it right now for this video. I just explained to you three positions. Look at this: 45 risk reward, 44 risk reward, and again 44 risk reward. If I put this all together, let me just calculate it again. So 44.5 plus 44.5 plus the last one was 45, right? 134 risk reward. 134 risk reward. So this is really crazy, guys. Let me just write it down over here. So this is what would have been possible by just looking at this, and I think price is really pushing that higher. So let me just delete this thing over here. Yes, price actually tapped in perfectly right into our take profit level, as we can see. Boom, pushing up higher. But this was not the only possibility for a trade. So I will explain to you then in the next video how you could have been trading everything over here, because you can always trade every single movement within the forex market, especially on the GU. It's super obvious how they're doing it, right? So our job is just to figure it out. But just let me just write down. So the first one would have been 45 risk reward, second one 44.5 risk reward, and the last one as well 44.5 risk reward. So this is really crazy what you can really do with this strategy. So 100 total of 134 risk reward. See you in the next video, guys. So just showing to you, this is the trades that you could have been taking by just trading this simple. It's very simple, right? So after I explained to you, it seemed to be very simple to you all, guys. So looks like the price. Look at this zone here, which I explained to you also already. Look at this, was also used as an future level of demand for price to come up higher. But yeah, going to explain this definitely in the next video. So looks like this one. Wait, one of these didn't really hit it, right? Am I sure? No, it did. This one. Okay, perfectly. Okay, guys, thank you for your attention. Hopefully this video was useful for you. See you then in the mentorship and with the next video.